Shipping is the next stock on our radar. The company has seen its profit surge by 26%, but the revenues were under pressure. Revenues declined 6% on a year-on-year basis, and the low base has also helped the company expand on its margins. To talk about the way forward, we are joined by G. Shivakumar, ED and CFO at the company. Mr. Shivakumar, morning. First, if you could explain this 6% revenue drop that we've seen, particularly for shipping, which is the mainstay, 75-80% of your top line. Revenues are down 9%. What led to that?
Good morning, Reema, and thank you for having me. So two broad reasons. One is we sold 2 ships last year, both of which were operating in Q1 of last year, and we sold them after that during the year. So that's about 5% of capacity which went. The second is last year we had a contract of affreightment, which we performed on not on our ships, but on in-chartered ships. So while the revenue, it added to the revenue, but that was a low margin business in the sense that we took in ships on contract and we just made the margin on performing that business for our customer. So otherwise, the realizations broadly are similar to what they were in the previous year in dollars per day terms for the overall fleet. They're different for tankers and bulk carriers. They are higher for tankers versus previous year, and they are lower for bulk carriers versus the previous year. And but those have sort of compensated each other. So it's the top line movement is broadly one, that capacity, and the second, the fact that we had that contract, which we don't have this year.
So you mentioned, Mr. Shivakumar, freight rates. Can you tell us how much higher are the tanker rates now? And I believe you said year on year for bulk carriers, the rates are lower. So, you know, what are the prevailing levels? If you could share the numbers, that'd be great. Some reference range.
Yeah, you mean for Q1 versus Q1?
For Q1 and the outlook, I mean, how do you see the market play out for the rest of the year as well?
Yeah, so tankers are higher. So last year across the board, we made between $25,000 and $29,000 a day on average across our entire fleet, and each of the sectors was in that range. This year, you've got crude tankers in excess of $40,000 a day. Again, I'm talking Q1. You have product tankers in excess of 30, and you have bulk carriers in the low teens. And that's been sort of the impact. Coming to where the markets are now, the outlook is really tough. The market has been pretty choppy. So we've seen, because this is what happens when markets are tight, suddenly you'll have a steep drop in the market and suddenly you'll have the market taking off. So in the Aframax market, for instance, we've seen voyages fixed at in the market at $3,000 to $4,000 a day. And within the same week, we've seen voyages fixed at $40,000 a day. So it's been very choppy, which reflects the tightness, overall tightness in the market. So currently rates are lower than for tankers than they were in the last quarter, whether it's crude tankers or product tankers. So that's one thing. Again, this could change within this week itself. And I always have to put that caveat because the market is so finely poised between demand and supply. Dry bulk is more or less where it was, maybe slightly weaker as we stand today.
Okay, just one question very quickly. We are running out of time. But if you could take us through what the offshore vertical margins could really look like, because I know that the contracts were renegotiated at a much higher price. When are other contracts up for renegotiation? If you could just help us with that.
Yeah, the big assets really are the rig. We have one rig which has got the next contract. It's a 3-year contract. She'll go onto the contract probably in December this year. So small impact for the current financial year. The real big impact will come in, and we have 2 rigs repricing in FY25. But the full year impact of all 3 of those rigs, and we have another rig repricing in FY26 also, the big impact will really come in FY26. We don't know what repricings can happen. These are all tender businesses. So we don't know what repricings could happen there.
Mr. Shivakumar, we are out of time. Thank you very much for joining in. That's GE Shipping. A bit subdued today, but the stock is up 50% plus in the last 1 year. Out of time on Trading Hour. Thank you very much for watching.